Today on the Blockchain Report, Bitcoin's holding strong around 123K and retail traders are still asleep because apparently the bull run doesn't start until TikTok says so. Trump's floating tariff stimulus checks because nothing fights inflation like giving everyone more money to spend on Bitcoin. And Polymarket's now letting users bet on world events with Bitcoin itself, finally merging my gambling addiction and sound money all in one convenient app. All that and more right now on today's show. Let's go! Good morning and welcome back, my fearless holders of the digital frontier, to another episode of the Blockchain Report. I'm Hank Hudson, coming to you live from San Francisco, California, the city of startups, scooters, and existential dread every time Bitcoin drops 2%. It is Tuesday, the day where optimism goes to die somewhere between your inbox and your portfolio tracker. Now, before we cannonball into today's flood of Bitcoin madness, smash that like button like it's an SEC subpoena. And if you're not already following RoxomTV and me at Hank at RoxomTV, go ahead and fix that before your algorithm decides that you need more dancing real estate agents in your feed. Because this is the Blockchain Report, where we separate the signal from the influencers, and we do it before most of you finish your early morning Celsius. All right, let's check in on this morning's market rundown and see how the numbers are looking. Let's go. All right, so this morning, Bitcoin seen a bit of a drawback. We saw yesterday we hit new all-time highs right around that 126K level. Currently, though, we're back down to around 122, but things are still feeling pretty good right now on the front. I think we still have a lot more room to run, and I want to talk a little bit more about that as we bring up some of our Bitcoin charts this morning that I'm going to do my best to explain to you in the plainest English possible so everybody can understand, because there's a lot to keep track of here. So let's bring those up here, gang. So great. First, what do we have here this morning? We're taking a look under the hood of Bitcoin's latest breakout, because while prices are flirting around that $123,000, $122,000 range currently, the on-chain data says this run might still have a lot of fuel left in the tank. So first up, what we're looking at here is the short-term holder MVRV Bollinger Bands. Yeah, that sounds like something you'd Google to impress a date, but it's actually a pretty good indicator of short-term market sentiment. Or in plain English, this metric tracks whether recent Bitcoin buys are feeling rich or wrecked. So when it climbs up toward the upper band here, short-term holders are sitting on some juicy profits and the markets get a little bit too hot. Now, when it drops to the lower band, everyone's panicking, crying into their hardware wallets, and that's usually where the bottoms tend to form. Right now, we're in the heated but not overheated zone, which is the on-chain equivalent of this party's getting good, but hey, let's keep an eye out for the cops. Now, the Bollinger Bands were tightening for weeks here, hinting at a big move coming up, and that move happened, and now price has ripped from oversold to heated territory in record time. Historically, that kind of sharp move tends to cool off a bit before continuing higher, so yeah, the short-term correction risk is very real, but the overall trend still points to higher prices. So if Bitcoin takes a quick breather, let's not panic here, gang. It's probably just catching its breath before the next cardio session. Let's go to our next chart here. This is what we call the everything indicator, okay? So on this chart, it's not a gimmick from Elon Musk's next company or something. It does kind of sound like it. This is actually a real thing that people use, believe it or not. So this metric mashes together a bunch of key on-chain and macro indicators, okay? Things like the MVRV score, the Puel multiple, liquidity data, and even global money supply, basically creating one big vibes index for the entire Bitcoin ecosystem. Now, in past cycles, when this thing hits the 80 to 85 range, that's when the markets tend to get a little euphoric, okay? Overconfident, usually about 5 minutes from doing something really dumb. Right now, we're sitting at about 48. So 48, here's that 48 level here. You can see it right here. That means we're nowhere near peak mania. In fact, it's showing a clean uptrend of higher lows. Each dip a little stronger than the last. And you can see that here as we have those little circles indicating as such. So right now, that's kind of Bitcoin's version of character development. We're evolving, things are looking good. And there's still plenty of runway left in this cycle. Now, if previous patterns hold, we're not in a blow-off top territory just yet. We're in a check your leverage, but stay seated territory. So keep your eye on that. Things are looking pretty good. And last but not least, we have our final chart here. Let's talk about the hash rate. Now, this measures how much computational power is currently protecting the Bitcoin network. Or in short, the higher the hash rate, the stronger and safer the blockchain is. And right now, as you can see, it's going vertical. Okay, hash rate is at an all-time high, over 10 times higher than it was during the China mining crackdown back in 2021. You remember that, right? Everyone thought Bitcoin was dead, miners fled, and doomsday tweets were everywhere. Fast forward to now, well, the miners are back, the rigs are humming, and the network is stronger than ever. So the next time someone says Bitcoin could be hacked, I want you to show them this chart and politely laugh directly in their face. Hash rate is the heartbeat of Bitcoin. It's the pounding just like it did a double espresso, which means things are looking pretty good right now. So, Hank, what is the bottom line here? Well, Bitcoin's network strength is at a record high currently. Cycle indicators still show room to run, and while short-term charts might look a little heated, the broader setup points to more upside as we move deeper into this cycle. We're not in the sell everything and move to Bali phase just yet. We're still in the stack sats, hydrate, and let the market cook phase. So things are looking pretty good. A lot of upside to be had. We're taking a quick break, but as soon as we're back, we're getting into this morning's bull run to talk about our top stories of the morning. So stay tuned, more blockchain report right after this.
Security matters. Zappo Bank, the only way to bank your Bitcoin. Apply now at zappobank.com.
And we're back with this morning's bull run. This is the part of the show where we go over the top stories of the morning so that you don't have to. Let's get into it, shall we? Well, as you might know, Bitcoin's officially broken that 126K mark. We saw it yesterday, and apparently retail investors couldn't care less. No memes, no laser eyes, no when Lambo tweets, just a quiet record high fueled entirely by corporate inflows and a mass liquidation of short positions. Now, this rally is being driven by suits, not by Reddit. That's like finding out the next Coachella lineup is just accountants. Now, for 17 years, Bitcoin's price history has been full of manic spikes. You remember those, huge rallies followed by giant panic sell-offs. But this one's hitting a little different. It hit a new all-time high yesterday. It dipped a little, kept going, and currently we're around that 122, 123 level. No big crash, no dead cat bounce, just relentless institutional buying. Now, Ethereum's tagging along for the ride, flirting with its own all-time highs, but Bitcoin's the one making everyone sweat right now. Analysts say this could signal a fundamental shift. Now, if corporate inflows are now setting the price, not retail FOMO, then Bitcoin's market behavior is entering an entirely new phase. ETF demand is booming, treasuries are adding Bitcoin to balance sheets, and $1.3 billion in acquisitions were reported last week alone. That's without even counting Strategy or Metaplanet. And retail, well, they appear to be asleep at the wheel. Normally, we'd expect the crowd to pile in after an all-time high. You remember how that goes. But instead, it's the institutions leading the charge while retail scrolls on TikTok. It raises a fascinating and yet mildly terrifying question. If this new paradigm holds, do all those old Bitcoin cycle models just stop working? The halving chart, the stock to flow models, the 4-year cycle talk, all of that might be toast. We could be watching Bitcoin evolve from a hype-driven casino into a macro hedge monster that moves when central banks panic, which, for the record, is exactly what Satoshi probably wanted. So while analysts call this pattern unprecedented, Bitcoin is just calling it another Tuesday. And President Donald Trump is back at it again, and this time he's declaring that there's virtually no inflation. On Truth Social, Trump celebrated good news for the holiday season, saying tariffs are boosting the economy and early prices are down. He also claimed that the booming stock market is proof that everything is fine, nothing to see here, everything is just fine. Meanwhile, Bitcoin just hit 126K yesterday, as we mentioned. Gold is on its 40th record high of the year, and the S&P 500 is having one of its best 6-month runs ever. So yeah, the markets are doing great, as long as you ignore the government shutdown, political chaos, and the $37.9 trillion in national debt. The Dow, the S&P, and the Nasdaq all opened higher yesterday, pretending Washington doesn't even exist. The Fed, however, isn't feeling quite as chill. Their latest CPI report shows prices creeping up yet again, 2.9% year over year. That's slightly higher than last month's 2.7%. Fed Governor Stephen Moran wants deeper rate cuts, arguing that monetary policy right now is too tight. Or in other words, let's juice this market one more time. But other Fed officials say service inflation's still too high, meaning don't throw another match on the gasoline just yet. The Fed already cut rates by 25 basis points, aiming for 3.5 to 3.75% by the end of the year. Futures markets now price in a 94% chance of another rate cut soon. And all through this, Bitcoin and gold are grinning ear to ear, because when politicians say no inflation and the Fed keeps printing Bitcoin, Bitcoin's the one asset that doesn't have to lie about it. Meanwhile, Trump is floating a new idea that could send Bitcoin flying higher. We are talking, of course, about tariff stimulus checks. Yeah, you remember those, right? Trump says he's considering handing Americans $1,000 to $2,000 checks funded by tariff revenue, which he claims could reach over $1 trillion a year. Spencer Hakimian from Forbes says this is like taxing someone's right wallet just to put it back into their left wallet. Take a listen. Let's roll the clip.
One of the only economic benefits that was starting to emerge from the tariffs was that the collections were so high that it was helping to contribute to pay down some of our insurmountable deficit as a country. But now we're coming around to say we're going to do stimulus checks again like we're in 2020, 2021. Guys, this is the problem. This is why our deficit never gets solved. We have such a spoiled electorate, and we have politicians that play so short term. All they care about is their popularity in the midterm and in the general elections, and at the same time, all the citizens want is more money in their own wallet. This is a perfect microcosm of why our deficit never gets solved in the country. And guys, it's kind of worth noting that bond yields did sell off on this news. It's no longer immaterial. Tariff collections could be $500 billion this year. That was going to help pay off the deficit. But if we just go and give that right back to everyone in this form of government spending, well, it defeats the entire purpose.
Yeah, I think we saw this play out before, right? I remember COVID, everybody got money, and then next thing we knew, 25% of all the money in existence was printed. So we'll see how this plays out, but this could spark another liquidity-driven bull run for Bitcoin, which, hey, similar to the COVID-era stimmies that inflated everything from BTC to Beanie Babies. A Federal Reserve researcher estimated the COVID stimulus only moved Bitcoin's price by about 0.07%, but that was before ETFs, before institutional treasuries, and before the orange coin became a macro asset. This time, the multiplier effect could be massive. If fresh cash starts flooding the system and people are already panicking about inflation, Bitcoin could become the ultimate pressure valve. And Polymarket, the crypto prediction market that lets you bet on whether Trump sneezes before noon, is now taking Bitcoin deposits. That's right. You can finally fund your degeneracy with the King coin itself. No more pretending to care about Ethereum gas fees. This move opens up the world's biggest prediction market to Bitcoin holders. And the timing? Kind of perfect, since Bitcoin's flirting with new all-time highs like it's trying to get its ex's attention. Polymarket has over 1.2 million users and 21,000 active markets. And yes, people actually wager on everything, from wars to elections to whether Taylor Swift blinks twice during a Chiefs game. But that's not the only big news here. The New York Stock Exchange owner, Intercontinental Exchange, is dropping a $2 billion bag on Polymarket. That could value the company between $8 and $10 billion. Now, both Polymarket and the Intercontinental Exchange CEOs were on CNBC this morning to talk about how this major purchase came about. Let's take a listen.
Shane was falsely accused of wrongdoing and was raided by the FBI. And a mutual friend of the three of us, actually, Tom Farley, called me up and said, you should reach out to Shane. He's a great guy. He's building something revolutionary, and I think he could use your help, because a few years earlier, I was falsely accused of something and was raided by the FBI. And I thought about it, and I said, you know, I don't really know this guy. I don't really want to get involved. But that weighed on me. And ultimately, when Shane was exonerated, I picked up the phone and said, I have something in common with you, and I'd love to sit down and talk about whether or not we could compare notes. And much as your introduction said, I mean, just look at us, right? I'm old and bald. He's young and mop-headed. I have a closet full of ties. I don't think he owns a tie. You know, the company that we're sitting in was started in 1792. He's got the hottest financial services company in 2025. And so we started to talk about the white space of opportunity that existed between our firms and this common experience that we both had, and it brought us together.
Shane, were you looking for a partnership? And also, how do you think about, I mean, you're the young hot kid on the street right now. How do you feel about partnering with the old guy?
Look, I'm just humbled to be here. When Jeff and I started talking about collaborations, despite maybe being from different eras, there was just a lot of cohesion. We were on the same page about all different types of things that we could build. I think what's exciting here is a lot of older juggernaut companies, they make announcements about different types of things they're going to do with cutting edge technology, but with what we're doing, there's going to be real bite. We're going to be able to actually build and ship some great stuff. Jeff, you know, ICE is the largest exchange company. They have so many assets in traditional finance, so much infrastructure, and I can't believe we're being called. And his willingness to go and say, hey, let's go and leverage this infrastructure to go and innovate and disrupt the existing legacy systems and go and try and figure out the new brave new world. You know, you just can't pass that up. You've got one life. The idea that we can have the, like you say, the old money and the new money, or sort of like the largest existing player with like the new kid on the block, it's just a match made in heaven, and we're so excited.
So Wall Street is literally betting on people betting. Well, I guess the circle is now complete. And BlackRock spot Bitcoin ETF, the iShares Bitcoin Trust, ticker IBIT, has officially gone brrr. It's pulled in nearly $245 million in fees over the past year, making it BlackRock's single most profitable ETF by a wide margin. The next best funds, the Russell 1000 Growth ETF and the MSCI EAFE ETF, are trailing by $25 million like a middle school runner grasping behind the varsity kids. Gasping, you know. IBIT passed them back in July, and since then it's been sprinting straight toward history. It's now a hair away from $100 billion in assets under management, sitting at $97.8 billion after only 435 days of existence. Now, to put that into perspective here, Vanguard's S&P 500 ETF took 2,011 days to hit that same mark. So yeah, BlackRock's doing in 14 months what took Vanguard more than 5 years to accomplish. And the secret sauce here? Fees, right? BlackRock takes 0.25% off the top of total assets under management, which means every uptick in Bitcoin's price is another ka-ching in Larry Fink's pocket. Last week alone, IBIT sucked up $1.8 billion in inflows out of $3.2 billion total going into U.S. spot Bitcoin ETFs. Basically, half the Bitcoin ETF market is now one giant BlackRock vacuum cleaner. Every other ETF in BlackRock's top 12 has been around for over a decade. IBIT has been around for less than 2 birthdays and is already paying for everyone's Teslas. Bitcoin breaking over 126K and 125 over the weekend didn't exactly hurt things either. ETF demand goes up, Bitcoin price goes up, BlackRock's fee machine just keeps on humming. Now, BlackRock, they want a little more. They filed paperwork for a Bitcoin premium income ETF, which would sell covered calls on Bitcoin futures to collect premiums. Or, in other words, they're about to start day trading their own Bitcoin exposure for yield. The trade-off here, well, less upside, but you get steady payouts. So while the rest of Wall Street is chasing altcoin ETFs like kids at a candy store, BlackRock's sticking to Bitcoin, the adult in the room counting its cash. And because apparently we now live in a world where the biggest YouTuber on earth and the biggest Bitcoin evangelist on earth are casually swapping financial advice on Twitter, Michael Saylor, the co-founder of strategy and self-appointed prophet of the Bitcoin Standard, had one simple message from Mr. Beast this week. He said 2 words: buy Bitcoin. No emojis, no hashtags, no link in bio, just the digital equivalent of a burning bush. Mr. Beast had posted about the rise of AI videos, wondering out loud what happens when artificial intelligence starts making content better than humans. Saylor's response was instant, blunt, and honestly kind of iconic. Hey, Rizbot, you little creature. Now, while most creators panic about being replaced by machines, Saylor basically said, let AI take your job. Bitcoin will still pay your bills. Crypto Twitter lost its collective mind. Half of the replies were memes, the other half were people signing up for Coinbase accounts like it was 2017 all over again. And the timing couldn't have been much better. Because while Saylor was preaching the orange gospel online, his company recently reported a $3.9 billion gain on its Bitcoin stash for Q3. At this point, Saylor doesn't run a tech company, he runs a publicly traded Bitcoin vault with a PR department. Meanwhile, Mr. Beast had his own crypto subplot. Blockchain sleuths accused him of secretly dropping $320,000 into Aster tokens, totaling over $1.2 million in holdings. Then he clapped back on Twitter saying, never heard of that coin, that's not my wallet. Classic, because nothing unites the crypto community faster than denying your bags. So to recap here, in 1 week, Michael Saylor makes billions in Bitcoin gains, doesn't buy any new coins for the first time in months, tells Mr. Beast to buy Bitcoin, and sparks a meme war that probably onboarded 1 million new people. God bless the internet, right? And because reality wasn't absurd enough already, the US Treasury just confirmed it may mint, wait for it, a Donald Trump $1 coin to celebrate America's 250th birthday in 2026. Could you think of a more fitting tribute to America than Donald Trump on a coin? Yeah, the same guy who launched his own meme coin might now have a real coin. There's just one teeny tiny legal snag here. Section 6 of the Circulating Collectible Coin Redesign Act of 2020 clearly says you can't put a living person's face on US currency. That's right. It's literally against the law to mint coins.
You are fake news.
Hey, get out of here. But this is the Trump era where laws are more like polite suggestions, right? The proposed design shows Trump's bust on one side, and on the other side, Trump pumping his fist with the words, fight, fight, fight. It commemorates his survival of last summer's assassination attempt, which is certainly one way to design national currency, I guess. For context, Calvin Coolidge was the only living president ever featured on a coin back in 1926 for America's 150th anniversary. That $50 flopped so hard that 859,000 of them were melted back down at the mint. Let's just say history isn't bullish on sequel coins. Now, when reporters asked Press Secretary Caroline Leavitt if Trump had seen the design, she said she wasn't sure, but added, I'm sure he'll love it. And of course he will. It's money with his face on it. If this coin actually gets minted, it'll be the most literal form of Trump currency yet. And you can bet the Bitcoin crowd will have a field day pointing out the irony here. Because while Washington debates whether to put a president on a dollar coin, Bitcoin's over here saying, you know what's better than fiat? Not needing anyone's face at all. And Telegram founder Pavel Durov wants the world to know he's not funding his private jets with encrypted stickers. Nope, he says his lifestyle is entirely bankrolled by Bitcoin, not Telegram. On Lex Friedman's podcast, Durov revealed he bought a few thousand Bitcoin back in 2013 around the $700 price. He admits it was at the local top at the time, but he didn't care. When the price later crashed below $200, people mocked him. His response, again, I don't care. I'm already really rich. Now, because unlike fiat, nobody can confiscate your Bitcoin. Nobody can censor you for political reasons. And unlike Telegram, which Durov admits is a money-losing operation, for him personally, Bitcoin kept him afloat. He flat out said, Bitcoin is what allowed me to stay afloat. Durov predicts Bitcoin will one day hit $1 million because governments are printing money like drunken frat boys with a counterfeit machine. Meanwhile, Bitcoin has predictable inflation and a hard cap. Bitcoin is here to stay, he declared, and he didn't stop there either. He also talked about Ton, Telegram's blockchain project from 2018 and 2019. He said Bitcoin and Ethereum weren't scalable enough for Telegram's hundreds of millions of users, so they built the Ton coin with shard chains. Now, the US killed it with regulations, but the project survived as the open network. Now, Ton is embedded in Telegram, leading the NFT trading charts and hosting Toncoin, which hit $8.25 in 2024 before tanking 67%. Predictable. So yeah, Durov's app may still be figuring out the whole revenue thing, but his Bitcoin bags are keeping the lights on. And he's not shy about saying it. I believed in Bitcoin from the start, and it saved me. I feel like I've heard that before. All right, we're taking a quick break. When we're back, we got more of today's top stories. In just a bit, we'll be joined by a special guest to break it all down. Stay tuned. More Blockchain Report coming to you after this. All right, it's time for some socially awkward. Let's see what's going on in that whole arena. Because in a rare show of bipartisan sanity, California just passed a law banning loud commercials on streaming services. That means starting July 1st, Netflix, Disney Plus, and all the others can no longer blast your eardrums with a 200 decibel detergent ad right after a quiet death scene in Ozark. Governor Gavin Newsom signed Senate Bill 576 into law, saying, "We heard Californians loud and clear," which is easily the most self-aware pun a politician has made this decade. The law requires streaming platforms to match the volume of the ads to the volume of the content that they accompany, a rule that's been in place for traditional TV since 2012, but somehow skipped the internet because, well, Silicon Valley's motto is move fast and deafen people. The bill passed. Thanks, Riz. The bill passed unanimously, meaning for one brief, shining moment in time, Democrats and Republicans in Sacramento agreed that everyone hates being shouted at by Hulu. The Motion Picture Association, which represents Disney, Netflix, and all the other entertainment giants, opposed it, saying it wasn't necessary because, of course they did. They claim the streamers are already voluntarily working on it, which is corporate speak for we're hoping you wouldn't notice. So now, instead of your smart TV waking up your dog every time an ad starts, your home theater will remain peacefully loudness balanced. The irony here, California, the birthplace of Hollywood, autoplay ads and algorithmic sensory overload is suddenly leading the charge for volume moderation. Somewhere, a sound engineer is weeping tears of joy. And if you think about it, this whole thing feels a little poetic. A state that can't regulate rent, water, or homelessness finally managed to regulate volume. Still, progress is progress, I guess. Now, if only they could pass a bill that forces YouTube to stop showing me 2 unskippable ads before every crypto explainer. Come on, guys. Until then, I'll take the small win and enjoy the sound of silence. Victor, I want to talk to you about this one. Is this a real problem? We live in California. Aren't there bigger fish to fry, or is this something that needed to happen? What do you think?
Fish to fry, but also those loud ads are really annoying.
They are, but it's kind of like, I think, our whole world in a nutshell right now, right? Like, it's kind of, it's a Trump 101 thing, right? It's something everybody can get behind, but is it really that important? Not so much. And it just kind of reminds me of like everything Trump does. Like, what was it early in his, the Gulf of Mexico being the Gulf of America? Not needed. Does anyone care? But I guess a lot of people signaled that as a win. Do you think this is Newsom just being like trying to get a win out there that everybody can agree on? Because he's, kind of a polarizing figure.
Maybe. Yeah, I can see that. But there's just so many things to focus in California. I mean, our roads need to get repaired, the homeless issue. I don't know. They're just
really
wasting time on this. Like I said, the loud commercials are annoying, and I'm glad they won't have to deal with that. But it's just like a small, minute thing that I'd rather have them focus on something else.
Yeah, our taxpayer dollars being put to good work yet again.
I'd like to
Gavin.
know.
Really
Yeah, I'd like to know how much time was spent on this. Like, they have to do a proposal, they have to vote on it, the governor has to sign it.
Right?
How much of taxpayer money went into this?
Dude, just to suck on government resources and time that we could literally be using for, I don't know, any of the real problems in our society. And frankly, we don't need people watching more TV. Maybe we should keep them loud so that people aren't wasting their life away in front of this big box all the time. I mean, we're all guilty of it, but like, come on. Let's get out into nature, touch some grass, guys.
Although they do, wake you up when you fall asleep. So watching
That's
something.
true. That's true. They're kind of the opposite of Netflix in that way. I mean, I guess Netflix doesn't have ads, right?
Yeah, they do. It depends on your plan.
Oh,
But
they do.
they have ads
Oh,
now,
okay.
yeah.
They always just ask me in that weird way if I'm still watching,
Right.
which I always felt seemed a little judgy. I'm like, hey, I can watch this as long as I want. I don't need your input, Netflix.
You know, it would have been cool if they banned having the same ads every time. Like, Hulu has the worst. It's like the same ad
do.
every time we go to break.
Yeah, there's only so many ads I need about heartworm medication for my cat. So, Well, I'm going to write him a letter. I'm upset about this one. You got me jazzed up. All right, let's move on to the next story, Victor. I'm getting up. I'm getting angry. All right, this next story I want to talk about. We're talking about Waze. You remember Waze, right? The navigation app that turns every driver into an unpaid traffic cop. Well, they're rolling out something called conversational reporting. Now, that means you can report road hazards by just talking. No buttons, no menus, no fumbling around like you're defusing a bomb at 80 miles per hour. Now you can say, looks like there's traffic up ahead, and Waze, powered by Google's Gemini AI, will translate that into a map update. You talk, it listens, and boom, hazards reported. It's like Siri and the DMV had a baby. The feature's been in beta for a year now, but it's finally rolling out globally. Of course, though, there is a catch to all this. There's always a catch. Waze keeps reminding users about it aggressively. If you don't enable the feature, the pop-up keeps reappearing like a needy ex who just wants closure. And some users say it pauses their music playback mid-drive, which is about as relaxing as a flat tire on the Bay Bridge. I had one of those like a couple of weeks ago. It was really bad, so trust me on that. But I guess at the end, it is kind of progress. AI can now understand when you complain about other drivers, which means it's officially caught up to every passenger's mom. This is one of Google's few actual useful AI projects, unlike Gemini's essay generator or YouTube's AI remix button that literally no one asked for. And while it doesn't directly tie to Bitcoin, it does tie to the broader theme of voice-driven tech, because the future isn't clicking, it's talking. And when crypto wallets can understand send $50 to my Lightning address instead of scan QR code, copy hash, confirm gas, that's when real adoption actually happens. Now, Waze's voice reporting might make traffic suck a little less if only someone can make regulators that conversational. Victor, I want to talk to you about this one too. I think it's a good idea in theory, but only because if anyone has used Waze, I actually abandoned Waze a long time ago because they used to have like icons that you could get while driving, and some of them would be like off of the shoulder, and I'm like, are they trying to encourage us to drive wayward everywhere? Like, it seemed really dangerous. What are your thoughts on this? Would you use it?
No, I don't use Waze. I've seen that, like the feature where it tells you if there's like a police near or something. But I think Google Maps does that now, and I'm pretty sure Apple does too. But I didn't know about this like collecting tokens and stuff while you're driving. It was like a game?
Early Waze had that. There'd be like a lollipop on the side of the road, but oftentimes these things would literally be like on the sidewalk. So I'm like, what is this trying to have me do? And then you'd collect one on the road. Sometimes they would be on the road, and you'd get like a points. And I just never understood that, and it was incredibly distracting.
Yeah.
So I guess this is a step in the right direction, comparatively.
I can see that. The only thing that would annoy me would be it interrupting my music.
Right? That's a real vibe killer.
Yeah.
For that. Especially when it's like, do you have to go, hey Waze? Like a hey Siri type thing to activate it? Like, I don't know.
I already mute like my maps, so I don't like the directions like being told. I'd rather just look at it.
Right.
But yeah.
And
I mean,
it's also an example of big tech getting us even more familiar and to like conversing with AI, right? It really started with Hey Siri, and now it's going to be like Hey Waze, and then all of a sudden I'm going to be talking to Rizbot, who I have in my own house. Like, this is a slippery, scary slope here. And also, we forget Waze is owned by Google. So really, I think what they're doing is they're using Waze to farm data that they then use for the Google Maps. So it's like Waze is this kind of like wonky, weird, niche, map system, but they just take all that info and they put it into Google Maps now. That's how Google Maps has like, the police and stuff, and they actually adopted a lot of it. But I got a feeling they're combining the data from both of those. I mean, they gotta be, right? They own it.
Yeah, I wonder if this will help their driverless cars too.
That's also a good point. Yeah, I feel like this is all part of a bigger plan just to mine everything. Like, they don't just want the data that we input manually. They want to hear what we're talking about. That way mics are on all the time and they're mining our conversations. Oh man, this is getting too real too fast. I love Rizbot, but I don't think he's worth this personally. But I do love him. He's great. So, I don't know, man. All right, let's get into it. We got some more stories to talk about. Thanks for joining me, Victor. I just had to go off on a tangent there, because I think Waze is kind of dangerous. All right, let's talk about Elon Musk. We got a video to play about him? No video? Okay, cool. Well, that was my fault. So a federal judge just told Elon Musk that he can't move his latest legal headache out of Washington, D.C., meaning that the world's richest man is stuck fighting the SEC in a city he'd probably rather nuke with a SpaceX prototype. U.S. District Judge Sparkle Suknanen, yes, that is her real name, denied Musk's request to relocate the case to Texas or New York, saying that he failed to show why a venue change was justified. Or in other words, you can launch rockets, Elon, but you can't launch this lawsuit out of D.C. The court takes Mr. Musk's convenience seriously, Suknanen wrote, before politely pointing out that Musk, a man who literally owns multiple private jets, spends at least 40% of his time outside his chosen forum. Or in other words, you're rich enough to teleport and you'll be fine. The SEC sued Musk back in January, claiming he violated securities laws by failing to disclose when his Twitter, now X stake, crossed the 5% mark back in early 2022. Musk waited an extra week to file the paperwork, just enough time to quietly scoop up more shares at a discount, allegedly underpaying investors by more than $150 million. Basically, the SEC says he played Monopoly with insider info. Musk says rules are for non-playable characters. This latest denial is just another chapter in the never-ending soap opera titled Elon versus Everyone. The SEC has already dragged him to court once for ghosting a scheduled testimony, and last December he even offered him a settlement, pay up in 2 days or face charges. Musk's response to that? A big public middle finger. There he is. Just does what he wants. He posted the letter on X declaring they categorically refused. So to recap all of this insanity, the SEC's mad, Elon's defiant, the judge's name is Sparkle, and the only thing moving right now is Tesla's legal bill. And two families filed lawsuits against Tesla recently, alleging the Cybertruck's door design kept their college-aged children from escaping a burning vehicle after a November 2024 crash. The parents of 19-year-old Krista Sukahara and 20-year-old Jack Nelson filed in California, arguing the electric door handles became non-functional in the crash. Now, this case arises from catastrophic design defects in the Tesla Cybertruck that turned a survivable crash into a fatal fire, the Nelson lawsuit states. Now, Sukahara and Nelson were riding with 19-year-old Soren Dixon and another passenger when they crashed. Sukahara and Nelson survived the initial crash, but died in the fire that followed. Dixon was also killed while the fourth passenger was able to survive. After the car's electronic door handles failed, rescuers could not open the door from the outside. A manual backup release inside the door was concealed beneath the map pocket liner at the bottom of the door, which the Nelson family argues was not feasible to use after a crash. These defects created a foreseeable and unreasonable risk of occupant entrapment and death in the event of a collision, resulting in power loss, the Sukahara family lawsuit reads. The families argue that Tesla was well aware of similar issues from previous incidents in which door handles failed. Now, the NHTSA said in September it was opening an investigation into Model Y doors after reports of inoperable handles. Tesla also recalled more than 46,000 Cybertrucks in March after identifying a defect that can cause the panel of the pickup to fly off. The Hill has reached out to Tesla for comment, but nothing just yet, so we'll keep you abreast of that. Elon's got problems. All right, we're taking a break, but when we're back, more blockchain report, and we'll be joined by one of our favorite guests on the show, Decentra Suze, in just a little bit to break down what's going on in the UK, so stay tuned. More blockchain report coming to you live right after this.
Security matters. Zappo Bank, the only way to bank your Bitcoin. Apply now at zappobank.com.
All right, we're back. We're going to go take a peek at what's going on at the RoxomTV Twitter account, or X, whatever you want to call it. If you're not already subscribed, maybe do yourself a favor and do so. These guys post on our team like 30, 50 times a day. It's so many, I don't know how they do it, but it's really like the best place on the web if you're trying to get all the most accurate and up-to-date Bitcoin news all the time. So RoxomTV, make sure you're following us on Twitter. So what I want to talk about first right now is you can see this big chart we have up here. BlackRock has recently made a $967 million Bitcoin purchase, all right? If this isn't another clear example of the writing on the wall, gang, I don't know what is, right? BlackRock, the big evil empire of financial markets, has been going big on Bitcoin. We talked about the IBIT ETF earlier, the fastest growing ETF in history. It's almost at $100 billion worth, which would make it the fastest ETF to ever get there by a wide margin. Listen, BlackRock is kind of the canary in the coal mine for Bitcoin, right? If things are looking good and BlackRock is buying Bitcoin, you can bet your bottom dollar they've got good reasons behind it, and we will see a lot more institutions following suit, and we already have. So anytime we see a big purchase like this from BlackRock, it's certainly worth us taking notice on. So big news coming out of BlackRock. Let's see what else we got going on today. If we scroll down a little bit, we have, another big news. The S&P launches the Digital Markets 50 Index to provide investors diversified exposure to Bitcoin and crypto, right? Again, guys, gals, we're seeing it. Traditional finance is acquiescing to customer demands. People want more exposure to Bitcoin. They want more exposure to other cryptos too. I mean, Bitcoin is the way, the truth, and the light. But nonetheless, the demand is clearly there, and we're seeing it creep up more and more with each passing day. So things like this may just seem like passing news on your feed, but this is all part of a bigger puzzle that we're putting together in real time that shows us Bitcoin ends this puzzle looking up and to the right forever. So these are things you got to watch out for. Is she here? Okay, cool. We're going to take a quick break, but when we're back, we're going to be joined by one of our favorite guests in the whole wide world, Decentra Suze, joining us right here on the Blockchain Report. Stay tuned. We'll be back with her and more right after this quick break. All right, welcome back. It's time for some Blockchain Without Borders. Let's see what's going on in other parts of the world, because the UK government now officially owns about 61,250 Bitcoin. Not bad. That makes it the third largest sovereign holder in the entire world, which is pretty good for a country that still hasn't figured out that they are all driving on the wrong side of the road. Now, those coins were seized from a Chinese fraud case worth over £5 billion, and yet the British government says creating a national Bitcoin reserve is not appropriate. Apparently, having billions in Bitcoin is fine, though. Recognizing that it might be useful, too far. Instead, UK leaders spent their big Labour Party conference talking about digital identity, because nothing says freedom quite like turning every citizen into a walking two-factor authentication token. Visa's Mandy Lamb said the quiet part out loud. The trick is, how do you link payments with IDs? Or in other words, how do we make sure every cup of coffee comes with a social credit score? Civil liberties groups, well, they aren't buying it. Big Brother Watch warned that digital IDs might start as optional but end up mandatory for work, housing, and even buying groceries. And frankly, they're not wrong. Britain's track record on data security is basically one big whoops. A public petition against digital IDs has hit 2.7 million signatures because the British might love standing in queues, but not that kind of line. Meanwhile, across the pond, America is going full Bitcoin nation. President Trump created a strategic Bitcoin reserve back in March. Congress followed with the Bitcoin Act, planning to stack up to 1 million BTC over the next 5 years. El Salvador has been doing it for years. And the UK, well, they're still arguing over whether identity cards should come with a Union Jack emoji. Here's the irony to all this. The government already has billions of dollars in Bitcoin. It's literally sitting on a better hedge than the pound, but instead of using it strategically, they're holding conferences about surveillance software. Britain stands at a fork in the road right now. Permissionless freedom with Bitcoin or permission slips for every transaction with digital IDs. And if they keep choosing the latter, the rest of the world's going to lap them faster than a lightning transaction. All right, to talk to us today about this very specific case, we have one of our favorite returning guests to the show. She is one of the sharpest voices dissecting the intersection of Bitcoin freedom and policy. You've read her latest piece in Forbes, Bitcoin and Digital ID Show the UK's Fight Over Freedom, a story that perfectly captures the tug-of-war between individual sovereignty and government control. Joining us again on the Blockchain Report is Bitcoin journalist, analyst, and resident rebel philosopher. Let's give a big Blockchain Report welcome back to the show, Susie Violet Ward, also known to the Bitcoin world as Decentra Suze. Oh, she's back, and she's looking sharper than ever. Suze, it's great to have you back on the show. How is everything on your side of the pond?
Yeah, really great. I always love your introductions, and that was such a fantastic synopsis. I was behind here giggling. I thought it was brilliant.
Well, I appreciate it, Suze. You are the expert on this particular subject matter here, so I'm excited to get your 2 cents, or well, I don't know, whatever you guys call it. What are cents called in London times? What do you guys call the cents there? There's a different name for it, right?
Well, pennies, but we could call it my 2 cents.
Pennies. Your 2 sats. All right, we'll call it with that. So, Susie, your piece on this subject makes it clear that the UK is at a bit of a crossroads right now between digital freedom and digital control. How would you describe that tug of war in your own words right now? What's going on over there?
Oh, good grief. It's ridiculous. So digital IDs were not in the manifesto, in Labour's manifesto. They haven't been discussed. There's been no public consultation. Nobody's asked for it. Nobody wants it. It's not needed. And the reasons why they're telling us that they need it, they just don't need it. So they say now that they're linking it up to the boats crisis, that they want to have digital IDs because we've got lots of people coming into the country illegally. It doesn't make sense. We have work visas and documents for these people. It's just one of those things where they try and create this perma crisis and then just usher in some form of authoritarian dystopian nightmare just to try and give people a sense that they're actually doing something, when in actual fact it's just a perfect excuse for just controlling people. I mean, the whole thing is actually quite ugly and quite disgusting, but I don't think Keir Starmer really understood, oh no, your membership is I don't think Keir Starmer understood how upset people would be about it. I mean, you said 2.7 million, that's what I put. It's nearly 2.9 now since I wrote this article. So wow. Yeah, I think he underestimated the extent of the backlash.
Yeah, I mean, I'll be honest, I'm a little surprised because I love it when my girlfriend makes me carry multiple Apple ID tags. So I don't know what your guys' problem with all of it is. Now, you talk about Britain holding over 61,000 Bitcoin, yet refusing to treat it strategically. What does that say to you about how policymakers are actually viewing Bitcoin versus how they talk about it over there?
Okay, so largely I still think that they think it's a joke. And when I say they, I'm talking about MPs. MPs are normal people that read the mainstream media. They've been affected by the misinformation that's been in the press. So they still have all the lazy stereotypes that people associate with it. Bad for the environment, it's a Ponzi scheme, used for criminal, blah, 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 blah. They don't think it's got any intrinsic value. They don't understand it. So we've written an open letter to our Economic Secretary of the Treasury. We don't want them necessarily to have, or we're not telling them that they must have a strategic Bitcoin reserve. We're asking them just to do a feasibility study. When Emma Reynolds, the Economic Secretary to the Treasury in March was at the Fixed Asset Digital Asset Summit and was asked about this, or March or May. It was around about the time that the US were actually putting in or Trump was discussing a strategic Bitcoin reserve. Somebody asked Emma Reynolds the question, will the UK consider this? And she just shrugged and just went, oh, it's not for us. So they're not even taking it seriously, and they're still citing volatility, and they don't really understand that actually it's less volatile than a normal tech stock. So, the old tropes are still there, they're not moving on, and they're just not learning about it.
Yeah, I'm having a hard time understanding why, if you own that much Bitcoin, I mean, third largest sovereign holder, I think they said in your story, you would think they would be more interested in learning about, I don't know, about it. What can they do with it? What problems does it solve? But instead, they're more focused on digital ID systems. Why do you think that is? Is it that just ignorance? Is it fear? Is there maybe something more deliberate going on here? I just don't understand.
The funny thing is the individuals within the government, I think, are well-meaning. They go into government because they want to make a change. And unfortunately, they are badly advised by civil servants. And it's very difficult to get the correct information to them. When I came back from Liverpool, I actually sat on the train opposite somebody who was working on digital IDs at the Tony Blair Institute. It was uncomfortable. Yeah, it was uncomfortable. And the funny thing is when I explained where I was from, he just said, well, you're not going to change my mind. And I thought, well, do you know what's interesting? I don't want to change your mind. I just want people to be in receipt of good information so they can make up their own mind. I don't want to be a dictator or tell people what they think. But it was interesting how he went straight to that, right? You're not going to change my mind. And I'm like, I just want people to be well informed. But the thing is, what they cite is that digital IDs are going to be inclusive. They're not. There are lots of studies to suggest the very opposite. So not only are they saying that it's going to help stop the boat crisis, where there's absolutely nothing to suggest that that's true. Plus, as I said before, we have other forms of digital IDs that would solve that problem if they wanted to actually implement the law. They're just full of, I was going to say shit. They're full of it. They just make stuff up as they go along, and they're definitely not inclusive. That is provable, but that's what they're telling the public.
Yeah, and it's interesting you mentioned this gentleman you met who was actually working on digital IDs, and he apparently didn't even want to hear it. You're not going to change my mind. And that's kind of an interesting place to start from, where you're just saying, you can present me with any information in the world you want. It could be as accurate as possible, but I'm still going to choose to ignore it. Is that kind of the sentiment generally around Bitcoin in the UK right now? And why do you think that is, if that is in fact the case?
Joe, that's a really interesting observation, because we did have 2.5 hours where we were sitting opposite each other on a train. It would have actually been a really interesting discussion, and I would have been willing to learn. Yeah. I would be willing to learn, because I don't want to be fearful of these things. If he had something to say to me that made me think, oh, do you know what? I hadn't considered that. Or maybe it's not going to be as bad. Or maybe these controls will be in place. I mean, it's unlikely, but I still would have listened to him and actually had a discussion. But it always shocks me at how people just aren't, it's almost like they've lost the ability to have these discussions.
You've written before about the difference between, Bitcoin adoption and then understanding. So my question to you is the UK's hesitation on this front, do you feel like it's more about technology or some kind of ideology? Do you have any thoughts on that?
It's difficult to say, because I think there's lots of different reasons. So we currently have a Labour government. And when we were writing open letters to the Conservative government, we felt like they were more receptive and that momentum was building. Had they have stayed in, I think we would have made more progress. As soon as Labour came in, it felt like we were rolling backwards. The responses were definitely less open. So it's really difficult to know what the issue is. Yeah. We know that they have been tarnished by mainstream media because that there's no good information in there. So, for example, Bitcoin Perception is something that analyzes the mainstream media. And so across all the main Daily Mail, BBC, all the main outlets, if you analyze Bitcoin, it says that most of it is negative. There's a slither of balance and a very little bit of positive. Well, I mostly only write positive stuff, so I just don't understand how the BBC can't find more positive coverage. And when I actually spoke to the crypto correspondent about this very issue, that he was just like, well, what more is there to talk about? The number go up, and I was just like, oh my goodness. So there is just a massive gap in understanding, and the being tarnished. Plus, I do think that they're all being advised badly. Labour governments are inherently socialist, which is more centralized, which you could say is very anti-Bitcoin, but then I suppose that would be giving them credit for actually understanding the decentralized nature of it. So I'm not even sure it could be that. I don't know. It's really difficult to know what it is. Plus, I know, you have to do hundreds of hours to really get your head around it. I mean, before I came into this space, I was an accountant and I worked in IT. I was a financial analyst. I did a little bit of developing, and then I learned about Bitcoin. You can't just read an article from the BBC in 2017 and think you know what's going on.
Right. What do you think it would take, like what kind of catalyst would be needed for the UK to actually take Bitcoin seriously? Are you guys gonna be waiting until we actually start a Bitcoin strategic reserve here in America? Is it really gonna be something like that drastic that needs to happen for them to open up their peepers and actually see the world for what it currently is and where it's going?
So we don't have access to a Bitcoin spot ETF in the UK. And tomorrow, the FCA are going to reverse a decision to allow retail investors to have ETNs, which is a little bit odd because it's just a debt instrument, really. It's not holding the underlying asset, but that's kind of largely where it comes from, because if our Financial Conduct Authority are playing silly buggers and they don't really understand what's going on and they don't know the difference between Bitcoin and crypto, and they're stopping retail from having access to the best performing asset of the decade, I don't know. It just seems like nobody's really getting it.
Yeah, it seems almost like a disservice to the great people of the United Kingdom in and of itself by not allowing them easier accessibility to these through your own country. Like, it's kind of crazy. But we'll see if how that ends up playing out. I want to switch gears a little bit here, Susie. In your story, you talked about civil liberties groups and how they're sounding the alarm about mission creep. Can you kind of unpack what that could look like for us a little bit in practice, and how fast could that realistically happen?
Well, exactly. So when they put this to the public, it will very much be on the terms that the public want to hear, possibly. So, for example, they'll say, don't worry, it won't be linked to this, it won't be linked to that, we won't be able to do that, we won't have access to this. They'll tell you everything that you want to hear. Once it's been implemented, all of a sudden you're hooked up to the services, you can't make a payment, and like you say, like attached to a social credit score, it will then start creeping in until you have to get a vaccine, or you aren't allowed to go down the digital central bank digital currency route. You know, you've flown too many air miles, you've bought too much meat. It could absolutely be, it'll be linked to welfare payments, tax payments. You know, it could shut you down if you haven't complied with parking. I don't know, there could be an endless list of things that they could do with this digital IDs, especially if Visa's Mandy Lamb says, and what really upset me when I actually heard that is that she used the word trick. The trick is, and I don't think that she even really knew what she was saying, but the trick is to link digital IDs with payments. And I just thought, my God, you've got to live in the world that you create, and you can't even see this dystopia that you're building.
Yeah, that is a couple of scary steps in a direction I don't think anybody is ready for. And to give a little further clarification to our audience, Susie, if you had to explain to someone who's outside of the crypto world, what's the difference between a digital ID for convenience and one that's for control? Are you able to separate those two for us?
Everything will be designed for convenience initially. So services that you're entitled to. So we have a free NHS over here, and people in the UK are entitled to it. They'll probably start running it through so that you can only access medical care if you can show them this digital ID. Now, funnily enough, another person I spoke to at the Labour Party conference was saying how not everybody can get ID because you might be visually impaired and you therefore can't have a driving license, or you might have difficulty getting a passport, and so therefore they want to introduce this so that it fills a gap for people that can't necessarily gain access to the current ID forms that are available. But then when I pointed out to this person that it's fair to have a digital ID if you want to, but making it mandatory is a line that I don't think we should cross, they didn't really have an answer.
Yeah, no, that seems fair. I don't think I'm ready for that either. In your story, you also quoted Big Brother Watch saying that the digital identity could exclude rather than include. Do you feel like that's something that's already happening in small ways that most people just aren't really noticing yet?
Yeah, possibly. It's difficult for me to say because I'm not a part of that yet. I suppose you have to walk a mile in somebody's shoes before you really know what it feels like. But I just think that whatever they tell us is absolutely not going to be true, and it's not going to stay as it is. It will be there will be a lot of mission creep, no doubt.
Yeah, no, that sounds like the government. And in your story, you mentioned that really incredible stat that you updated us, and you said there was 2.7, now 2.9 million people signed the petition
approaching
against digital
2.9.
IDs. Yeah, approaching. So that's a pretty big number. What does that tell us about how public sentiment in the UK is shifting around surveillance and privacy right now? What are your thoughts on that?
Well, I think that people really woke up during COVID. And I think that if you speak to a lot of people that previously thought that their government had their best interest at heart and that mainstream media could be trusted, and you speak to those same people now, they'll have a very different viewpoint. And I think that because they can now see, a lot of what we were told to do during COVID made no sense. They can see the coercion that happened during the time when people were being forced to get vaccines that arguably they didn't need, and hadn't really been on the market for a long time. Yet you were then starting to be forced into, for example, you couldn't go on holiday easily. I remember round about Christmas taking my kids to a winter wonderland, in an open air winter wonderland in London in December. And to go into it, we had to show our vaccination cards. It was insane. And that's what the world is going to turn into.
Yeah, it's really kind of interesting to see the effects that COVID is having on the world now, however many years removed from it, and not just in terms of vaccines, but how we view the government and how we view how much control they should or should not have over things that we do. It's really opened up a can of worms, and I think that's also opened up a lot of people's eyes that we could be doing things a lot differently and probably better than we are currently. And in your story, you point out that while Britain debates these ID cards, we got the US and El Salvador already over here treating Bitcoin as its own kind of reserve asset. What is the United States and El Salvador seeing right now that you don't think the UK is able to visualize or see just yet? Because I'm just trying to understand the disconnect here. You guys are our biggest ally.
I would love to know the answer to that. If I knew the answer to that, maybe I could help plug that gap. But it's really difficult because it's not just the US. When you think about the UAE, they understand it too. Singapore,
That's true.
Global game theory is really kicking off. And I remember speaking on a compliance panel, and there was a lawyer from Revolut there, and he was talking about the UK having a second mover advantage. And I was just like, are you for real? We haven't even got a third mover advantage. This is nuts. You can't sit there and say that. That's just words. And I just think they're so deluded and asleep at the wheel that I can't answer that question.
It's crazy to me too, because with your wonderful accents, every British person I've ever met, I'm like, you're one of the smartest people I know right now. But this is such a silly thing seemingly from my seat at the table. I'm just like having a really hard time understanding it, especially when in your piece you wrote that Britain wants to become a digital and AI superpower. Yet how can it realistically do that while ignoring or maybe even suppressing the one open protocol that embodies digital sovereignty? Like, what's going on there?
See, that's another crazy disconnect that I spoke to that digital ID guy from the Tony Blair Institute about. So there was an MP called Peter Kyle who just made a flippant comment about how he wanted the UK to be an AI superpower. I was like, what? We've got the highest electricity prices in the world. How on earth are we going to find and be able to pay for the vast amounts of energy that are going to be needed when we're paying £1 billion in curtailment to not produce electricity? We can't even fix curtailment and demand response with our renewables. Yet somehow we're going to become this AI superpower with this like incredible amount of energy that's going to go along with that. And when I put that to the guy at the Tony Blair Institute, and I was just like, so how are we going to make this happen then? And he was just like, well, I like to think that it's aspirational. And I was just like, what? Are you serious? I want to go to the moon. There's loads of stuff that I would like to do, but I don't say it because it's not going to happen. And I just think it's so disingenuous and dishonest to actually come out and make these statements knowing full well that we have no chance.
Yeah, it almost makes me think maybe we should fault ourselves because, like, that's just government lip service at its finest. We've seen that time and again through the history of time. So I guess maybe we shouldn't be surprised, but it's certainly disappointing, you know? So.
And very disingenuous.
Sorry,
I was just going to say, when you actually call them out to actually be told that it's aspirational rather than an actual thing that they think that they can do, it's like, so you're lying then. Got it.
Yeah. Oh boy, well, governments have never lied to us before. I can't believe it. Now, there was a really interesting line in your piece about an unholy alliance of mega corporations and consultancy firms. I felt like that hit pretty hard. Can you give us some color on what that looks like behind the scenes?
So I think I was quite surprised by how many times because Visa were there, and I was in a room where they were having conversations with individual MPs. So my team at the Labour Party conference were on the stand talking to people coming up, and I was going to these talks and just taking notes and seeing what was going on. And so Visa were the sponsors of one of these days, and they were interviewing MPs. And one of the things that Visa kept saying is, we're in collaboration with the government. We collaborate with the government. We'd like to collaborate with the government. We'd like to collaborate with you. And then it just made me realize how in bed Visa are with the government. And because they are pro-digital IDs and they are pro-attaching payments to IDs, and because obviously it's going to reduce their cost of compliance, it's going to make their business model easier, simpler. They're not really looking at it as if they're people that are going to have to kind of live in this world that they create. They're almost forcing their agenda on the government. And then Bitcoin Policy UK, the company that I am the co-founder of and CEO, are trying to push for good regulation and good policy that actually helps people and helps the retail investor and helps innovation business. All of these good things that the UK say that they want to do but don't seem to be able to. And we're trying to give them genuinely well-researched and educational pieces to help them make informed decisions, and they won't even entertain talking to us because we don't have the money of Visa.
That's so.
It's not that they won't talk to us; it's that we can't break through because we don't have the same money.
Right. I mean, is that really what this comes down to? Is this just a big money problem, and whoever's got the biggest bucks is going to get the ear of the government to actually listen to them? Because this is just insane to me on so many different levels. And specifically, like right now, I kind of feel like you're one of the few journalists out there who manages to like connect the dots between we got policy, we got money and power. So I guess my next question for you would be, do you think that Bitcoin journalism has kind of weirdly become the last place where these types of conversations can even happen freely? Because it sounds like in the UK, they don't even want to talk about it.
Yeah, It's tricky. It is really difficult. But even to be a good journalist, you have to disassociate yourself from the fiat system. So a lot of the work that I do is either very, very low paid or unpaid, because for me to not get sucked into those bad incentives and to make good choices, I can't make my decisions around money. And that's where the problem lies.
Right. Yeah, I don't like that one bit. And as we move forward, how do you see, digital identity and CBDCs and AI kind of converging? Is it inevitable that they're going to merge into one big system of control? Because it's kind of starting to feel that way.
Well, it's so in the UK, they've said that they are probably not going to consider a CBDC, which I think everybody felt quite relieved about. And you've now got, what is it, the Clarity Act that says that that's not going to happen, because I mean, as much as it's annoying that Americans keep banging on about their constitution, actually, it's a really good document, because at least you can point to it and say, hang on, this is anti-freedom. We don't have anything like that. However, I do think that stable coins are a concern. So even if they do come around and say CBDCs are not going to happen, I personally think that stable coins are just a CBDC via the back door. So I don't know, swings and roundabouts.
Yeah, it certainly does. And in your story, I want to talk about something you also mentioned, and you mentioned earlier during our talk about the Tony Blair Institute supporting digital ID as a fairness tool. Do you think these institutions genuinely believe that, or are they just dressing up control as progress right now?
I think there's a lot of useful idiots, and I think that they are very much buying their own bullshit. So unfortunately, you have a lot of well-meaning people, and that's the worst in a way, because they actually believe that they're doing the right thing. So yes, I think that the Tony Blair Institute are probably at a high level. They probably know that they're not being honest, but I think the people underneath them are part of the psyop, for want of a better word. And I think largely a lot of people in government really believe that they're doing the right thing, but they've bought the same bullshit.
Yeah. And from your vantage point, your seat, are UK politicians even capable of understanding Bitcoin as a strategic asset right now, or are they still in the we'll just regulate it later phase? Because I don't see any openings for progress right now based on what I'm gathering from you.
So we have spoken to MPs, and the ones that we have spoken to have been really open, and they've understood. The problem is it's a very slow transfer of information. I can't arrange a meeting and have a one-on-one with every single person to try and turn round the narrative, because I think we may have mentioned before Brandolini's law, or the asymmetry of bullshit, that it takes 10 times the magnitude of energy to refute the bullshit than create the bullshit in the first place, which means that we have to go out to all of these people and try and undo that damage. But it's huge, but one-on-one, absolutely achievable. As a government of all 650 MPs, that's a lot harder.
And as Bitcoin just reaches new all-time highs, we were at 126 just yesterday. How are, people in that ecosystem reacting to that? Like, it's been up and to the right, it keeps going up and to the right. How long can they choose to ignore what is certainly seeming like the inevitable?
Well, they'll just cite volatility and the fact that they probably think it's going to zero because it's got no intrinsic value. I don't know. It's the same. It's same old, isn't it? They just don't. If they don't understand, they're not going to come out with anything new.
Yeah, it makes me think like Bitcoin needs its own PR firm, and because I don't think we're doing a good job as a community right now of maybe putting what Bitcoin does in the most simple terms possible that anybody could understand. Like, I've seen those, they do have the good images I've seen on Twitter where someone will put, a Bitcoin or a house cost this much in Bitcoin 10 years ago, and now it's only it was hundreds, and now it's 4. So maybe we need more things like that put into the ecosystem so people can wrap their heads around it, because it's shocking to me that people aren't understanding it the way that you and I do. And right now, Susie, if you were advising the UK Treasury, what would be the first thing you would tell them about Bitcoin that they just absolutely don't get right now?
The most important thing I would try and teach them about is how it's essential energy infrastructure, how it will help save us £1 billion a year on curtailment, and how they can actually have an extra revenue stream. Because one thing is using it for demand response and flexible load. That's very easy to explain. Another thing down the line is that I think hash rate is going to be really important in the future. So the US have about 40% of the hash rate and we have 0.1%. And I think strategically that's going to become very important. But it's going to be a long road before I can start explaining that to them. But I would start with the energy infrastructure aspect, but in the hope of being able to build on that from a hash rate point of view.
Yeah, no, that makes a lot of sense. And, you know, when I was reading your story, Susie, it kind of felt like a bit of a warning, but also at the same time, a call to action. What's the one thing you would want ordinary people to do or take away from your story after giving it a read?
That they need to pay attention, and that this isn't a problem for other people. It's not something that's going to be solved. If you want to keep your freedom and your privacy, you're going to have to fight for it.
Yeah, no, that makes a lot of sense. You know, it's always a lot easier to go through life burying your head in the sand and not paying attention to things that don't seem like they matter specifically to you right now. But it is only a matter of time until eventually that's going to affect you and the people you know. So it's like, come on, people, get your heads out of the sand and, you know, see what's going on. And we actually have your article up right here on screen, so you guys can check that out at Forbes if you're at home. Give it a read. It's a great read, and you should definitely take a look at it. This is important stuff, gang, so make sure to give it a look. And Susie, we're running low on our time here together, but you always have some of the best takes in the business. What is the best place that our audience can find more about what you're writing about, what you're tweeting about? What's the best place for me to send them?
The best place is just on X. Just look up at @DecentraSuze.
Perfect. Well, Suze, it's always an absolute pleasure having you on the Blockchain Report. Always a good time, a lot of fun. And we thank you so much for sharing your insights, expertise with us today. And we're excited to have you back on real soon. And I know it's getting late over there. We appreciate you hanging with us, because it's got to be what, like getting like 6 or 7 o'clock?
It's 20 to 6. I'm going to go and cook dinner for my kids now.
All right, well, get out of here. That's much more important than this stuff for now. You got to go spend time with that fam. But as always, thank you for taking the time with us today, and we can't wait to have you back again real soon.
Thank you, Hank. See you later.
See ya. All right, we're going to take a quick break here at the Blockchain Report, but when we're back, we got more stories, and we'll be wrapping things up today with our bull run in just a bit. You won't want to miss it. More Blockchain Report coming your way after this. Hey. Do you wish you could grab cash without selling your Bitcoin? Yeah, same. That's why Ledden exists. They're the global leader in Bitcoin-backed loans, over $9 billion issued since 2018, with a perfect record protecting client assets. Now, you're asking, what makes Ledden's loans different? Well, with custodied loans, your collateral stays put. They don't go degen and lend it out for yield. There's no credit checks, funds in under 6 hours, no monthly payments, you can repay anytime with 0 penalties, and for transparency, grown-ups out there, and that they actually want, they have proof of reserves reports every 6 months verified by a top accounting firm. So bottom line here, Ledden lets Bitcoin holders unlock liquidity without selling. You can check it out over at ledden.io/RoxomTV. That's LEDN.io/RoxomTV. Go take a look. All right, it's time for some AIO. Let's see what our tech overlords got in store for us today. As a new tech group called FastStream, backed by Simon Cowell, Robin Williams, Kylie Minogue, and U2's Adam Clayton, has officially decided that human TV hosts are overrated. What? Their new music channel, Roxy, is rolling out AI-generated presenters, basically deepfake MTV VJs that introduce music videos, tell jokes written by algorithms, and smile like they've never known human suffering. I don't like this one bit. Now, these virtual hosts were built using a platform integrated with Google's VO3 video generator, which means we're now 1 step away from AI Carson Daly and 2 steps from AI Bono giving us a moral lecture about compassion. The company says this is about cost cutting because why pay real people when you can render them in 4K. No, I don't like this one bit. Now, according to FastStream CEO Rob Lewis, with AI, we can have presenters introducing Beyonce from a yacht in the Caribbean without flying in a crew or chartering the yacht. Or in other words, the AI gets the view, the human loses the job. Now, Roxy says these AI... Get out of here, this is not the time. Get out of here, Wristbot. Now, Roxy says these AI presenters will all be labeled as such on screen, as if that makes it better somehow. Like, hey, don't worry, we're replacing you, but we'll watermark it. Actors unions aren't amused. Equity, the UK performers union, said these systems are trained on real actors' work, often without permission, and warned the Wild West of AI performance creation is ripping off artists to make companies richer. And let's be real, they are not wrong. It's the same old story, right? Tech companies get innovative and everyone else gets unemployed. I'd like to keep my job. Now, FastStream argues that AI is necessary to attract younger viewers because nothing says youth appeal like virtual hosts trained on your grandparents' data sets. It's ironic because the music industry is built on authenticity and rebellion and is now automating the people who actually gave it a soul. And it's a preview of what's coming for media everywhere. You think you're safe because you have a creative job or creative in your job title? Well, ask the AI VJs how that all worked out. At least Bitcoin can't be faked with a smile and a script. It's verifiable, it's transparent, it's scarce. Meanwhile, the future of music TV is literally synthetic. The machines aren't rising, they're hosting. Wait a second, am I AI? Just kidding, I think. Moving on. According to a new Senate report, AI and automation could replace nearly 100 million jobs in the next decade. Apparently, TV hosts too, which is one way to solve the whole quiet quitting problem, I guess. The study, led by Bernie Sanders' Help Committee, found that 15 of the 20 industries most affected will lose more than half their workforce to automation. So if you're in the fast food, customer service, shipping, or secretarial work, congratulations, you're now training your replacement every time you use ChatGPT. Fast food takes the biggest hit out of all of these. Up to 89% of counter workers could be replaced within the next 10 years. That's 3 million jobs gone, and the fries will likely still come out cold. The report also flagged customer service, freight movers, and assistants, all between 80 and 83% at risk. So basically, if your job can be done by a slightly sarcastic chatbot, you might want to start stacking sats now. Get out of here, this is not the time. Now, as part of the research, staffers literally asked ChatGPT to predict which jobs it would destroy, which is like asking the Terminator for career advice. The report calls for massive policy reform, shorter work weeks, higher minimum wages, corporate taxes and automation, and giving workers a stake in companies that deploy AI. So basically, make Skynet socialist. Bernie has op-ed warned that we're headed toward a dehumanized economy obsessed with efficiency. And let's be real, Bernie's not wrong. But the irony is AI doesn't want to make humans happier. It wants to make them optional. I don't like it. All right, we're taking a quick break. We'll be back right after this. All right, welcome back. We decided to rejoin the numbers and do a quick market rundown because the Bitcoin price has been moving and shaking a little bit this morning. As a reminder, we saw up to 126 new all-time highs yesterday, but we've seen a little bit of a drawback. If you remember, in our conversation with Stephen Orr, Mr. Big Beat himself, he said expect some profit taking in the near term, and I think that's what we're seeing right now. We're down nearly 3% in just the last 24 hours after eclipsing new all-time highs, so it looks like things are getting a little frothy at the top, and traders are collecting that profit, but nothing to be concerned about just yet. It certainly seems like the momentum is very much in Bitcoin's favor as we make our way into Q4, which, remember, is usually the best quarter for Bitcoin historically, so I think we got a lot of room to run here. Now, it's about that time of the show, gang, where we wrap things up with a little bullish, bearish, or BS, so let's run the stinger and get to it at the desk. All right, it's time for a little bullish, bearish, or BS. This, again, is the part of the show where we recap our top stories of the day and see what they mean for Bitcoin going forward. Let's get it started. First up, we got Bitcoin is holding steady around 122K right now after hitting fresh all-time highs just yesterday. But instead of retail FOMO, it certainly appears that this rally is being fueled by institutional inflows. We're talking ETFs and corporate treasury buys. There's no memes, no laser eyes, no Reddit, just suits quietly pumping the market. My verdict on this, it's making me feel a little bullish in my bones, because when Bitcoin moves without retail hype, that's a sign of real, durable demand, not emotional trading. If the price keeps rising on institutional inflows alone, then when retail finally wakes up, that second wave could hit like a tsunami, and I'm totally here for it, baby, so I'm bullish. Next up, what do we got? Donald Trump's floating the idea of handing out $1,000 to $2,000 checks funded by the U.S. tariff revenue, potentially over $1 trillion a year, or in other words, the government might start paying people with inflationary money again. And we remember how that turned out.
You are fake news.
I'm calling bullish on that. I'm very bullish on that, no matter what you say, Donald. I mean, remember COVID, gang? Everybody was receiving checks for like $1,000 or whatever it was. And do you remember what happened at that time? Bitcoin went straight up. Everybody was trading on Robinhood with their newfound free money. But where does the money come from, gang? Where does it come from, right? Because every time the Fed or the White House fires up that old money printer, Bitcoin responds with a nice smile. Stimulus checks equal liquidity, and liquidity equals risk on, and risk on means Bitcoin goes vertical. So if those checks actually happen, we can expect another COVID-style liquidity rally, but this time with ETFs pouring gasoline all over it, baby. Because free money equals higher prices, and stimmy season always ends in green candles, baby. So I'm feeling bullish. So right now, we got 2 bullish, 0 bearish, 0 BS. Can we get the clean sweep? Let's see. Last but not least, we got prediction platform Polymarket just added Bitcoin deposits, meaning users can now bet on everything from elections to Taylor Swift sightings using Bitcoin directly. Meanwhile, the New York Stock Exchange parent company, Intercontinental Exchange, is dropping $2 billion into the company itself. This is bullish too, right? I mean, this is Bitcoin breaking into a new corner of crypto prediction markets. And when legacy finance starts investing billions into crypto native companies that run on Bitcoin, that, my friends, is adoption, liquidity, and cultural reach all in one. It also gives Bitcoin another use case and another excuse to move more BTC off of exchanges so that I can bet on whatever I want, because I'm a degenerate gambler, and that's okay. Wall Street's betting on Bitcoin's future, literally, and that, my friends, is as bullish as it gets. So today's final score, 3 stories, 3 wins for Bitcoin. That is a clean sweep, and Bitcoin's outlook is looking bullish, baby, so we take out the money gun. The markets are rising on real demand, governments are flirting with new liquidity, and even prediction markets are hitching themselves to the Bitcoin train. If this is what a quiet Tuesday looks like, the next leg up could get loud and fun very fast. Well, that's a wrap for today's show, boys and girls. As always, thank you for tuning into another episode of the Blockchain Report. If you haven't already, do the right thing. Make sure to like, follow, and subscribe to RoxomTV and Hank at RoxomTV. And the Blockchain Report even has its own page on the YouTube, so you can go there and check out all the episodes and all of our interviews. It's a great place to go straight to the meat and potatoes of what is going on in the Bitcoin ecosystem right now. And you'll see me, so that could be a good or bad thing, depending on how you feel. I don't really care. I'm just here to give you the news, right? So remember, we are on every day, Tuesdays through Fridays from 8 a.m. to 10 a.m. Pacific time, but Mondays, we're starting a little later, 10 a.m. to 12 p.m. So make sure to like and follow, and as always, thank you so much for joining us this morning. And for those of you, I will see you all tomorrow, but in the meantime, as always, stay sharp, stay skeptical, and stay informed. I'll see you all tomorrow. Make sure to hodl on. Sayonara.